Thanks for joining us at Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon, I'm Ira Dugal. Let's get you the headlines. Sensex pairs gains after touching record highs, selling pressure in financials, and the mid-cap index drags the market lower.
IHH is third time lucky. Fortis Healthcare's board approves of the offer for the hospital chain.
Infosys is expected to stick to its revenue guidance when it comes out with numbers today.
Mounting losses and rising costs force Ola to push back its profitability by at least a year.
Conversations coming up on the show today. IHS Fortis Healthcare deal, the implications and the fine print behind it. Anil Singhvi of ICANN Investment Advisors joins us, and we decode the latest draft of economic data with Shubhda Rao. That's coming up in the second half of the show.
We'll get to Fortis in a bit, but a quick check on how the markets are faring. Neeraj is here with a closer look.
Very, very flat day, guys. Good afternoon to both of you. Very, very flat day. Equal number of gainers and losers, obviously, for the Nifty to do what it is doing. Reliance, though, continues on its merry way, so that is doing well. The only tough part is that all the other companies that have been giving it company in the last 4 or 5 sessions, so noticeably some IT names which have been doing rather well for the last 3 or 4 sessions, are not a part in today's rally. So Reliance is a bit of a sore spot. Yes, sole runner. Infy may be up, but HCL Tech was down about a couple of percentage points. Wipro has gained, some of the others haven't. So the heavyweights have kind of missed out on the rally today in a meaningful way, save for Reliance Industries. Banks too, chalk and cheese. So the likes of Kotak and Yes Bank have done well, but Axis Bank is grinding lower, about a couple of percentage points down for that one too in the session today. So again, negating, and the Nifty Bank too, lying absolutely flat, actually 50 odd points down in the red. Sadly, quite unlike what we've seen in the last few days, no clear trends that are emerging in the broader end of the spectrum. Last few days, mid-cap IT has done exceptionally well. Today, maybe an odd Emphasis, etc. might be doing okay, but some of the others aren't. Cyient reacted quite strongly to its numbers as well. Karnataka Bank reacted quite a bit to its numbers as well on the downside. So both of these names grinding lower. Cyient 5.5, Karnataka Bank about 7.5. So result reactions being noticed fairly well at the broader end of the spectrum. Volumes slightly lower than what were in the trade yesterday, but that's to be anticipated because yesterday was a day wherein we had the Nifty Bank weekly expiry. But 17 or 18,000 crores on the cash side, we might still nudge that 30,000 crores on the cash volumes on the NSE, which might be an interesting thing.
All right, let's move on to the top story. IHH may well have the last word. The board of Fortis Healthcare has approved the Malaysian firm's bid to take over the company, choosing it over a combined bid made by Manipal Healthcare and TPG Capital. Darshan Mehta first joining us with all the details. Darshan,
so 4,000 crores is the infusion that IHH will do, and it will be done at 170 per share. Basically, if you're looking at the other details, 23 crore shares will be issued. It's a preferential issue, which will be followed by a mandatory open offer that will come in, which will ensure that the stakeholder, if it does happen, IHH's stake will go to almost 57% in Fortis Healthcare. There is also a provision that they've done to refinance that debt of almost 2,500 crores, and they address all the obligation as far as the RHT acquisition is concerned and the PE exit from the SRL shareholders. It will take almost 60 to 75 days for the entire deal to get completed. Mainly, if you do a comparison of what's happened between Manipal and for IHH, what the deal structure is, why IHH indicated a 4,000 crore fund infusion, while Manipal it was 2,100 crores. The price was also different, 170 versus 160. As far as the debt refinancing is concerned, there's clear indication of 2,500 crores that IHH has given. No details so much from Manipal. On the SRL details, there's not much details given by IHH, but Manipal does talk about an infusion of 11434 crores, and there is a Fortis open offer for Fortis Malar from both. Basically, if you're looking at what the street is saying, yes, given the current circumstances, this is one of the best deals that Fortis could have gotten. Remember, IHH at one time bid 180, and the deal is now settled at 170 because there were just 2 bidders left. What Fortis has said that the deal is rather simple in terms of IHH offers the best price and best valuation Fortis at this point of time. They have given sufficient requirements in terms of future requirement. The transaction is much simpler compared to what Manipal is, and that's why pretty much they got it. The counter not reacting because most of the deals that people were saying were in this range only when they had submitted, and media reports had indicated deals to the tune of 180 to 220. That hasn't come in, it's come in on the lower end. So that probably is a little disappointing for Fortis shareholders.
Thanks, Darshan, for that. Well, that's the stock of Fortis Health, but let's listen to the other side. IHH CEO Chan C. Leng says Fortis will remain listed even after the open offer is completed. Sanjay of Bloomberg News, who logged into that conference with IHH, joins us with more details. What else did they have to say, Sanjay?
So, IHH always maintained a clear-cut position where that they will always present the deal very simple. For they operate at least 8 hospitals in the country. So they want to consolidate and they want to be a pan-India operator. So they have a substantial presence in the north. They want to become, they want to cover south as well. So, they always were committed towards getting Fortis into their portfolio, and they clearly said that they will they will keep this entity as listed one so that they can leverage upon Fortis. And as you recall, all investment bankers were very keen on this asset because as the quality of assets are very good. So we had in management before when the bidding war was intensifying. Sure. So they were clear, they were very satisfied and convinced about the quality of assets.
Thanks, Sanjay, for that. Let's in fact cut across to the management of Fortis. They're addressing the media in a conference call.
Saturday, and as you would have seen from those numbers, the numbers, there were no change. There were no new material findings. The only thing, of course, was as these were the audited results, it included the auditor's report. And the auditor's report predictably contained certain qualifications around some of the decisions that were taken on treasury matters and the controls around it. And so that, in a way, was no surprise. And we had to deal with the outcome of those qualifications as we got into the bidding process. Now, the bidding process itself, if you recall, we had invited the bids to be received, and then we had to extend the date because the audited accounts got delayed in turn. But finally, when we did receive the bids, we had decided, as per the process, that we would wait for the audited results to come out, post which we evaluated the bids. Now, understandably, the bidders had taken stock of the audit report and the qualifications in it. But having said that, the 2 bidders we had in the fray were fully committed, keen, and very, I would say, interested in making a serious bid for Fortis. And I'm glad that we ran a process till the very end with these 2 bidders very much competing to become the best bid. As you could see from the press release today, I think the evaluation we put out articulates very clearly the reasons why we chose IHH in terms of both the price per share, which was superior to the other offer, as also in terms of its composite qualities, in terms of addressing the RHT situation, the subsidiary SRL, as well as providing options for the shareholders through an open offer that would come post the preferential allotment. So given all these, given both the total quantum, the simplicity of their proposal, and I would say the relative certainty, and of course the price per share, IHH came out as a clear winner. I'd also like to say that, the way we had put out the bidding process, we wanted to make sure that whatever be the outcome, our process would be seen to be very fair, very transparent, with no sort of comment by either the bidders or other stakeholders that the process was anything but. And I'm hoping with the way we've gone through it and we've announced the successful bidder this morning, I hope that would be the takeaway with you as well. Clearly, both IHH and Manipal are very reputed players in the healthcare sector. We would have been delighted with either as partner, but it's just in these things that IHH did come out somewhat superior to the Manipal offer. And we now look forward to working with them and putting the proposals through for shareholder approval and hopefully post their approval to a very successful strategic relationship. So with that, I'll just pause and maybe hand over to Bhavdeep for comments from his side before we start to take questions.
Thank you very much, Ravi. Thank you, and good afternoon and good morning to all of you. As you've all been following the story for quite some time now, and as Ravi has rightly said, I think over the last 6 weeks, 2 months or so, I think we've made a significant amount of headway with respect to moving this organization forward. I think the one thing that bears worth mentioning is that while we've had a lot of discussion, a lot of conversation, and we've had the opportunity to speak with many of you at different times, that there's been a lot of attention, a lot of focus on the challenges that Fortis has had, and rightfully so. Clearly, the last 12 months have been challenging on multiple fronts, and that's something that we've had to deal with. From my perspective, as I look at it, as I look at the hospitals, as I look at our doctors, as I look at our nurses, I think that there are 2 or 3 important points that I'd like to share. One is that when we look at potential collaboration, working with IHH, I think there's a lot of tremendous synergy here from a medical perspective and from a patient perspective. At the end of the day, the healthcare scenario globally is in a bit of an upheaval. It's in a bit of a mess, whether it's India, obviously what we're speaking about, but quite honestly, it's not that much better anywhere else in the world. I mean, there's challenges globally around healthcare. You have an aging population, you have a disease burden that continues to grow, and you have unsolved issues. And I think that one of the things that this does is it allows for, in working with somebody like IHH, potentially start to address these issues, and I think that's important. I think from a Fortis perspective, as I just mentioned, we've had some challenges, we've gone through some tough times. I'm very proud of the fact that the organization has held together. I'm very proud of the fact that our doctors and nurses continue to do what they do best, which is take care of our patients. We've continued to maintain an open dialogue. One of the things we've done through this process, you heard Ravi talk about the process and how we've adhered to it, is we've engaged with our doctors, we've engaged with our top senior managers to get their perspective on what's important from a transaction perspective, what's important for the organization going forward, and how do we ensure that we continue to provide the best possible care. So, look, we are certainly pleased with where we are right now in terms of what potential next steps there are. We've had to deal with some of the legacy issues around, again, well publicized at this stage. I don't need to articulate that or go through that anymore. But we've just gotten past the audit. I think this is an important milestone. The next big thing, obviously, is the shareholder vote that will come about in the next few weeks. And post that, hopefully all goes well, and we can get on to the work that our doctors and nurses do in supporting them to ensure that we continue to provide very good quality health care. So it's an important day for us. It's an important milestone for us. We believe, again, it's a key step in the right direction, and we do think that moving forward, there's hopefully better things to come for the organization and for everybody who's here. So thank you very much for your time. I'm going to toss it back to Mr. Ajay Maharaj, and he will facilitate the discussion moving from here. So Ajay, over to you, please.
Hi. So you take the questions now, and we can just limit it to 2 questions per people, not more than that.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. The first question is from the line of Ajay Sharma from Economic Times. Please go ahead.
Right. So thank you very much, first of all, for hosting this call. It actually explains a lot. I'd like to understand from IHH management, what is the strategy from here on? There's been a long bidding war which has now come to an end. A price has been decided. How are you analyzing the asset right now? And in terms of potential, next 2 to 3 years, what is the potential? What is the strategy you would take? If you could paint a broad brush picture for us, because the widely people want to know what will your strategic roadmap will be. If not the specifics at this stage, at least you can broadly outline the way forward.
So we don't have this call is represented by members of the Fortis leadership team and Mr. Ravi Rajgopal, our chairman. So there's nobody on the call from IHH. Now, having said that, again, for the obvious reasons, from a clinical perspective, from a brand perspective, from a patient care perspective, I think there are lots and lots of synergies there. Quite honestly, the question you've directed is towards IHH, and I think that at some appropriate time, I'm sure you can talk to them, but we do not have anybody on the call right now representing IHH.
All right, that's the management of Fortis. Joining us on the phone line, Anil Singhvi, Chairman of ICANN Investment Advisors. Anil, thank you so much for joining us today. The deal has been done at about 170 rupees per share. It also offers a cash exit option for 26% shareholders. Do you believe this is fair value?
I think I would just go by this, whether this is a fair value or not a fair value, because I don't think the fair value is a science. I think it's a culmination of many, many facts before us. But most important factor is that post the change of the board, post all that what minority shareholders really worked hard in Fortis, today at least they have a very, very reputed party to really take the Fortis to the next level. So my take is very simple. It's not necessary that you must have a value put in the table which is the finest or the best value possible. But what is the way forward for the companies? The shareholders don't buy the share just for an exit. The shareholders buy the share for the growth of the company. And I think the Fortis, with the new management and the change of what has gone through in this, will be a far different company in years to come. So I think the excitement is there that minority shareholders could really raise their voice, got this whole thing. I mean, it was being done at 140, 145 rupees, from there to reach 170. So those shareholders who really want to get out, they got a good, much better price than what was offered. But more importantly, the board is different, the management will be changed, and I think going forward, Fortis should do much better than what it has done last 2-3 years. So in a way, I'm very happy with the outcome. So one can debate whether 170 is right price or 180 could have been better. I think those are. I don't think there's any definite and finite answer to that.
Anil, the backdrop to this deal has been mired in controversy. You did have a probe talking about alleged siphoning off of funds by the erstwhile promoters. There is an ongoing investigation by SEBI and by other government agencies. How do you think this change in ownership can ensure that minority shareholder interests are protected here on it?
There are two aspects to it. One is that the past, what has been done has to be really undone in terms of all the investigating agencies and all what has been done. But that's what one is putting a more or less a full stop onto what has happened has happened. Whosoever is the guilty has to be punished on that. But second thing is that if it has dragged on for a very long period of time, that would have been really destroying a very, very good business model. And Fortis has had a good business model. It was run by the completely rogues. That was the problem on that. So that is behind us. Going forward, IHS will strengthen the whole practice and the governance issues and all that what has really engaged in Fortis. And whatever misgivings or whatever misdeeds which have been done by the erstwhile promoters, I think they need to be punished, because I think there's been allegations of siphoning of the funds, and the monies have been doled out to all related party transactions, and the board was completely caught napping. I mean, most boards have this, that they get so carried away by the promoters in India is unbelievable. I think the boards must take a lesson from the Fortis, saying that just don't go by the names of the promoters or the value which they have shown in the past, not necessarily that they will hold the same values going forward.
Anil Singhvi, we leave it there. Many thanks, Reem, for joining us with your views. Candid as always, Anil Singhvi about the Fortis IHH deal.
All right, let's move on to Infosys. They'll report their first quarter earnings later today. If Accenture and TCS are anything to go by, a recovery in North America and the BFSI segment will lend support to Infosys as well. Agam Vakil is standing by, giving us a sense of what analysts are expecting. Agam.
Sure, so I'm going to get straight on to the expectations, which means that we're expecting about a 1.6% growth in dollar terms. In rupee terms, the growth could be a lot more robust sequentially at around 5.6%. There could be contraction in margins, where projections are at around 23.8% against 24.7%. And when it comes to profitability, likely to see a move up by as much as 2% quarter on quarter. Now, when it comes to this guidance, as the management has suggested over the previous couple of quarters, we are likely to see them maintain a guidance of around 6 to 8% in constant currency terms for the full financial year of 2019. And that said, when it comes to margins, at around 22.4%. Growth is likely to come on account of pickup in the banking and financial services vertical, and as well as the North American region, where we have seen growth in TCS as well as Accenture, and this is something that could play out for Infosys as well. We are likely to see contraction in margins essentially on the seasonal impact of salary hikes coming through. That said, operational efficiency is likely to counter some of this margins contraction. On the whole, we are also keeping an eye on deal sizes and wins in digital services, and of course what they are doing with automation as well as innovation and the plans that they have go and taking Infosys forward into this financial year. On the whole, we're expecting a mixed quarter from Infosys.
Agam, thank you for that. We'll watch out for those numbers later today. SBI's bond sale may help its peers decide whether it's time to return to the offshore market. Remember, no Indian company has sold offshore notes last quarter for the first time since 2009, and SBI may be the first to return to that roadshow for a dollar-denominated bond, green bond that is, that's already underway. Anurag Joshi is here with us from Bloomberg News with more on what's going to happen. Is this going to set a trend of sorts, or is this the sign of them coming back?
Yeah, so SBI started its roadshows this week, and what investors would need to watch out for is at what rate SBI prices the bond, because that's really going to set the ball rolling to, for other issuers to take a call whether, they can go ahead, whether the market is conducive enough for them to do a bond issue abroad, and whether SBI, is paying costlier rate on the bond or it is a reasonable rate. That is going to decide. And clearly the last quarter there were no bond issues because Fed raised rates and there was a sell-off in the emerging markets, and of course oil prices were just shooting up. So clearly SBI has taken a call now that probably the levels, the spreads in the dollar bond markets are maybe reasonable for them to come and probably price the bond. If they're able to price the bond at a reasonable level, probably that sets the stage for other companies to at least try and, if not price a bond, but go and meet investors, do road shows, and gauge the interest about how they would fare in the international markets.
All right, Anurag, thanks so much. Wanting to see whether that market picks up again. Let's move on. There's the FMCG sector where there's no letting up in the rally. India's 6 largest consumer staple makers are trading around their lifetime highs. This despite the expensive valuations. Agam Vakil standing by with a closer look. Agam.
Well, trading at lifetime highs, and they've actually outperformed not only the benchmark but the Nifty FMCG index as well. So if we can pull up the kind of returns that we're seeing for something like a Britannia, Godrej Consumers, Nestle, or for that matter HUL, all gaining well over 28% on a year-to-date basis, beating the Nifty FMCG index, and along with that Dabur and Marico well above the Nifty 50 index as well. But how does it stack up when you consider the valuations and see whether or not they are actually trading above their 5-year average? And as you can see, only HUL and Britannia are the ones where their FY19 price to earnings ratios are slightly above and at a premium to their previous 5-year average. Godrej Consumer, Dabur, Nestle and Marico all below that average, which means that some might suggest that there is still more upside left. But what does the consensus have to say about these stocks? Let's take a look at that as well. So when it comes to ratings out of 5, and the ratings are essentially based on the ratio of buys as against sell and hold ratings. As you can see, substantially good ratings, and in fact all of them are about 3.5 out of 5. However, the only stock with a positive return potential at this point in time is Dabur at 6%. Now, one might argue that if the return potentials are at a negative, what does it mean for the stocks? Do remember, we are moving into the first quarterly earnings, and that means that should we see strength come through in the first quarter earnings as well, we are likely to see a re-rating of the stocks, which means higher price targets, and that means that these return potentials could change for the positive. But that's a wait and watch. So on the whole, it's certainly looking good when it comes to the analyst ratings, when it comes to some of these FMCG stocks.
Agam, you want to tell us a little bit about the strengths and weaknesses of each player as well?
Absolutely. So let me start off with Hindustan Unilever. And, we all know that because of the fact that it's very dominant in a wide range of products across products and categories, well, it is very much dependent on how the economy does, which means that an economic downturn will mean a weakening demand, and that will, of course, impact Hindustan Unilever. The next one on the list, of course, is Godrej Consumer, and they have a very niche business, as we all know, household insecticide soaps and hair color. And the weakness here and perhaps the volatility that this particular company has seen is not in domestic markets but markets abroad, considering they have such a high exposure, especially when it comes to Africa and Southeast Asian markets. Moving on to the next one, Britannia, as we all know, leader in premium biscuits. The weak point, and as the management has also acknowledged, is their distribution, or rather the lack of distribution in the North Indian states, where they also have a lot of competition from regional players. And from Britannia, we move on to Dabur. Again, they have a very wide product line, and they are also very disciplined when it comes to pricing. But they are also they also have faced severe competition from emerging players like Patanjali, especially in the Ayurvedic segment, in which they do have a sort of a stronghold. From Dabur, we move on to Nestle, and again, Nestle has made its niche into entering markets where there is relatively less competition. The latest example being in its entry into cereals, and the challenges, of course, is relatively low exposure to rural areas, which are actually emerging, and that's where you see more value come through in comparison to some of the urban markets. And finally, Marico. They are dominant in hair oil as well as edible oil segments. However, copra has been the sticking point throughout the last year, and should we see a little more strengthening of copra prices, that means worsening margins for Marico. But for now, we have seen copra prices come off substantially, so that could augur well for Marico, thereby explaining why it is, along with several others, at a lifetime high in this point in time.
Thank you for that. That's the consumer space. Let's move on. Ola has pushed profitability or its profitability targets by a year. The country's largest cab aggregator has earlier had set a deadline of fiscal 19 to break even, but mounting losses and growing expenses has prompted the company to go slow on this target. Nishant Sharma now joins us with more details on this one. So Nishant, how much losses and expenses have risen over the last 3 years?
Well, India's ride-hailing platform Ola has pushed its profitability plan by nearly a year amidst its growing battle for market dominance with San Francisco-based giant Uber in the country. Now, that's according to the latest valuation report by one of its advisor, Gertex Corporate Services, which pegged that Ola will be able to achieve profitability only in FY20 with a net profit of about 746 crores. Now, that comes nearly after a year when another advisor, Jane Ambit and Associates, had pegged that Ola will be able to achieve profitability in FY19 with a net profit about close to about 170 crores. Now, if you look at Ola's latest financial data available, that's for FY17, Ola reported a loss of about 4,800 crores with an expenses about 5,000 crores against overall revenue about roughly about 1,000 crores. Now, analysts that I spoke to are of the view that there are two key issues that can hinder Ola's path to profitability. One is that there's a huge gap between the losses and the revenue of the company. That will play a big hindrance in its path to profitability. And the second is that Ola has already making enough efforts to bring down its losses. They have reduced discounting on the platform. They have drastically reduced the incentive that they provide to the drivers on the platform. There's not much really room left, Ola, for there to bring down the losses. And if at all they want to focus on profitability, that will take a hit on its growth, which Ola cannot afford at this point of time, given that its biggest rival, Uber, has hinted that it has no mood to slow down in the country and is only going to up its investment to increase its market share and penetration in the country.
Staying with the startup space, are you ready to download an app to find a cheaper option for an open heart surgery? Those days may not be far, as internet startups are now betting on medical tourism as the next big thing. Ariel Snyder of Bloomberg News has more.
Would you trust a doctor on the other side of the world to save your life? A growing number of internet startups are working to make the answer yes. I'm Ari Altstetter for Bloomberg News in Mumbai. The value of medical tourism globally is expected to grow to $125 billion by 2021, and startups from Berlin to Bangkok are vying to be that industry's Booking.com or Expedia. What they offer is savings. Average household spending on healthcare in the US broke 5 figures for the first time last year. But a heart valve replacement that cost $170,000 in the US might be only about $10,000 in India. So far, most of these startups have focused on non-life-threatening procedures like dental or cosmetic surgery to get more people comfortable with healthcare abroad. But major procedures are a growing part of their business. With rising healthcare costs showing no signs of slowing down, they're betting it's just a matter of time before medical tourism goes mainstream.
So we're going to break on that note. Coming up on the other side, we decode the latest inflation and industrial production numbers. Shubhda Rao, Chief Economist at Yes Bank, will join us on the other side.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
Catching up on news feels like a test match. Want the highlights? We hear you.
It's an ocean of news out there. Need a navigator? We hear you.
Do you have analysis paralysis? A case of too much information and not enough time? Do you wish someone would just pick the most relevant topics and tell you what you need to know? We hear you.
Good morning. You're watching Bloomberg Quint. This is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Welcome back. You're watching Power Lunch. Let's take a look at the headlines. The Sensex pares its gains after touching record highs, selling pressure seen in financials and mid-caps, which are dragging the market lower.
Core inflation takes CPI to 5% in June. May IIP comes in at about comes at a 6-month low.
US President Donald Trump says a soft Brexit will kill UK's chances of having a trade deal with the United States.
It's been a flat day for the markets. Agam is here with a closer look of some of those key movers in the last 30 minutes.
Well, Harsha, it's back to being quiet at this point in time. The Nifty is still above the mark of 11,000. That perhaps is a positive for those who are long in the markets, but the Sensex and the Nifty Bank essentially is marginally trading in the red right now. Let's take a look at the turnovers too, and well, not too much to speak for. Largely average, in line with what we've seen over the previous 5 or 6 days, leaving yesterday aside, considering it was a banking Nifty Bank expiry. At this point in time, NSE and BSE cash markets showing turnovers a total of just a little over 20,000 crores, and substantially lower. NSE F&O turnover was at around 3.8 lakh crores. What's really standing out in today's day of trade is BPCL. That's leading the pack when it comes to the Nifty 50. It's up around 2.4%. That's the same with Titan. Reliance Industries is the interesting one, possibly the reason why the indices at this point in time are in the green. That's because another 1.5-2% increase there as well, and that's possibly one reason why we're seeing a gain in the broader market indices as well. Bajaj Finance up as much as 2%. On the losing end, we continue to see UPL grind lower, further down by another 5%, now at around 554, another 52-week low, and more weakness in Z Entertainment along with Infratel. ITC is the one which is actually bucking the trend. While a lot of these FMCG stocks continue to advance, ITC continues to decline. Even today's day of trade is down by as much as nearly 2.5%. But on the whole, it's been a very quiet day of trade.
All right, Agam, thanks so much for that. Let's move on to economic data. Bunch of conflicting indicators. We had headline inflation, which came in lower than expected, core inflation that continued to rise, IIP slipped, but PMI in the same month, the data that came through showed an upside. So what should we read into all of this? Shubhda Rao, Chief Economist at Yes Bank, is joining us here on Parlan. Shubhda, good afternoon. Thanks for joining us here actually on the show. First question, what's happening at the core inflation level, Shubhda? Is it not telling us that inflation pressures are building up merely because demand is strengthening for starters?
I would think so, yes, because if you look at leaving aside the CPI headline, if you look at core momentum has been rising significantly up, and in fact we could see this momentum continue to rise until next month in terms of the annualized core inflation number, which could be moving up somewhere close to 6.5 range, 6.4, 6.5 range, and that is definitely going to be a point of worry for the Reserve Bank of India in terms of all the components within core. If you look at housing, if you look at clothing and footwear, and more importantly, if you look at the miscellaneous and the subcomponents of miscellaneous, which typically give you the consumption of services having gone up at a higher price adjusted for GST, they all have been rising consistently. Just to name a few, you've seen a significant average month-on-month momentum build up in most of the subcomponents of miscellaneous. You look at household items, you look at recreation, you look at education. Education has gone up from 0.37 to 0.83. If you look at transport, of course, no prizes for guessing why, is from 0.24 to 0.74. The short point is the core inflation momentum which is more reflective of the underlying demand conditions, has been moving up. To counter that, fortunately, the food prices have come off significantly, well below the market expectations, and that's what has kept the headline at 5% in yesterday's print, which was maybe about 25 basis points lower than the market consensus, including ours. So RBI would be not just looking at headline CPI, but as has been articulated adequately in the minutes, their attention would be more, under grip through the core momentum, which even if I look beyond next month's peaking of core inflation, is unlikely to go below 5.5%. So the monetary policy take could be fashioned basis the core momentum, including what's happening globally. So there are a lot of compelling factors which may prompt RBI to remain in perhaps a mood for tightening further.
Shubhda, on the points that you're making on core, is this more services inflation or is this more product inflation at the core level? I'm asking because is there a difference in how quickly these two different components react to strengthening of demand, services versus product in the core category?
Yeah. I think if I look at the miscellaneous, which largely represents the services part of it, like recreation, education, health, if I may say, has gone up from 0.4 average to 0.49 in the current fiscal year in the 3 months. Recreation has gone up from 0.35 to 0.53. 0.35 was the whole of last year. Average monthly momentum has gone up to 0.53. Education, as I said earlier, 0.37 to 83. It implies that services inflation has perhaps accelerating a tad higher than compared to what the products inflation would be. If you look at personal care, which would be products, would be 0.37 to 0.49. Definitely it's consumption oriented, but as we grow in the society in terms of per capita disposable incomes, the consumption of services typically rises, and if adjusted for GST rates, services have become more expensive. Obviously that's going to get reflected in your core inflation momentum.
Shubhda, hi, this is Harsha here. If the spike in inflation was largely demand driven, and if all the points that you've just you sort of presented, how do you reconcile then with the slowdown in industrial activity, particularly manufacturing?
I think the production side of data needs to be looked at slightly more carefully. If we look at the attendant factors which tell us capacity utilizations have gone up, order books are going up. If you look at the PMI data of the latest month, those seem to be suggesting that there isn't that kind of a slowdown that one perhaps thought of. I mean, there are improvements. The heavy lifting of capex, investment demand was being done by the government, but we are seeing that, in pockets also translating into the private sector space as far as capital spending is concerned. So I'm not too convinced that there's a widespread slowdown in investment. On the contrary, I would think that going forward, if there's a visibility of demand, and given the capacity utilization levels which, improved after 13 quarters, it would only indicate that going forward we could see, capital spending move up. How it is funded is going to be a combination of factors. You've seen bank credit get better. Of course, a fair amount of that bank credit is on account of personal credit. But having said, big ticket spending is also being seen, particularly related to infrastructure sector, be it roads, be it affordable housing, and so on. So I would reserve my judgment on the viewpoint that there's a slowdown or a very tepid improvement in investment. I would think that there are palpable factors which seem to suggest that investment demand in the private sector space is also beginning to show some traction.
Shubhda, what's happening on the food side? You historically coined the inflation on top, that's tomatoes, onions, potatoes, but what's happening on food more broadly? That seems to have flattened out, contrary to seasonal trends actually.
Yeah. Actually, this time round, Ira, what we've seen is a 1 month delay in all the adjustments as far as the seasonalities are concerned. So we really did not say inflation begin, moving up as far as food is concerned sometime in April, May. Sometime in April, we saw it beginning to harden sometime in May. Likewise, we haven't seen easing of inflation at the onset of monsoon. We have, it has taken time. But having said, there are these idiosyncratic items in food which cause price pressures, like the last time that we spoke at top or pot, whatever we want to call it. But this time round, what has happened in food is vegetable prices and fruits. Fruits and vegetables as a component together have seen, fruits have seen in fact a negative print if I remember correctly, but vegetables did not rise as much. So clearly, it's within food, proteins have gone up, but fruits and vegetables have probably dragged, and cereals have gone up also. So one culprit or one factor that has brought down the overall food inflation lower than anticipated has been fruits and vegetables. Going forward, I think it depends a lot on how the sowing pattern and the buffer stocks are comfortable, but how the monsoon progresses. We still have an overall 8% deficiency in monsoon until yesterday. We have central India and southern India doing very well in monsoons, but we still need to see that kind of improvement. In fact, east and northwest are running into a sizable deficits as far as monsoon is concerned. So monsoon will play a role in terms of not just in sentiment, but also in the sowing and therefore the ultimate food grain output, and that in turn could have some kind of impact on food prices. But But I think over the last few years, government has amply demonstrated its deft management skills as far as food inflation is concerned. So the concern remains on not food, but I would say crude. Crude is a moving part. You have a few days where it is looking closer to touch 80 and cross beyond 80. And over the last 2-3 days, the geopolitics, the nuclear deal withdrawal of US and the attendant issues around the trade have had their impact, no doubt, on the fuel will have impact on fuel inflation and overall in the cost of economy going up.
Sure.
So those are the things that we would continue to monitor, but definitely coal becomes the centerpiece as far as inflation is concerned.
Shubhda, we leave it there. Many thanks indeed for joining us with your view. Shubhda Rao from Yes Bank talking about inflation and IIP. With the Fed boosting interest rates and Trump raising tariff, the bottom for emerging markets remains some way away. At least that's what a Bloomberg survey of market participants say. Chris Anstey of Bloomberg News joins us from our studios in Tokyo with the survey findings. Chris, thanks for joining in. Walk us through what the survey revealed. Is there more pain to come for emerging markets or not?
Hey, Harsha. Yes, so we've done a survey of various investors, strategists, analysts across Asia, and we've essentially done a quarterly update of a survey that we do on the outlook for emerging markets. The survey shows that while we have seen in the past few days some stabilization in emerging markets, people don't think that a bottom is being formed here. 2/3 of the survey respondents see further declines in the second half of the year in emerging market stocks. About 2/3 also see further declines in emerging market currencies over the rest of the year. Where the bond market is concerned, there's a more divided opinion. It's about 50-50 in the survey on the outlook for emerging market bonds. The dynamics are pretty much as you said there. The top two concerns of market players continues to be you got the Federal Reserve not only raising interest rates, but what some think is even more important is their continual contraction of the balance sheet. They're pulling liquidity out of the global marketplace, and that pace is about $40 billion a month at the current rate. Starting in October, they're going to kick that up to $50 billion every month. So we've had this massive, injection of quantitative easing over the past few years. That's not only come to an end, but that's starting to be taken back, and that's hitting the emerging markets the hardest. That's one dynamic. And then the other dynamic that people are pointing to, this has been a new dynamic that we've had this year, is the trade threats, and people see the heightened tariff threats from the Trump administration potentially affecting the outlook for growth. Actually, it has two effects. Not only does the tariff hikes themselves potentially hit global trade volumes, but if they stoke fears and concerns and hit confidence among businesses and consumers in the big economies, that could have a second round effect by pulling back on spending, pulling back on investment, pulling back on hiring. We're not seeing that quite yet, but this is definitely a concern among investors and strategists, and they think that the emerging markets are going to be the ones that get hit hardest if there is a pullback.
Chris Anstey, many thanks indeed for joining us with those details. Chris Anstey reporting from Tokyo.
We end Power Lunch today with an interesting conversation with two Michelin star chefs, Gagan Anand and the Kolkata boy, whose restaurant in Bangkok has been crowded and has been crowned as the best in Asia for 4 years. Listen into this conversation.
Chef, you've certainly had a very impressive past few years. And someone like you doesn't get to where he is without, some kind of passion and drive. So what exactly inspired you to get behind the stove and start cooking?
I think
I was very good in non-studious things. So I used to bunk school, go for concerts, do the wrong and make it right. And cooking is a family thing in India. And luckily, it's one of those countries which still have kitchens left in their homes. I mean, today the problem in our environment is that because we live in big cities, we don't have any more kitchens in our home. And we live in 7-Eleven to restaurants. So the world is changing so fast. And I thought that I wanted to be a drummer. I wanted to be a musician. And I thought that it would not be profitable enough. I won't get a Bloomberg stint on the stage drumming. So I thought cooking is more interesting. So thankfully, I chose things in the right way. And it took me 22 years to come here, so it's fine.
Wow. So, for those of you who haven't quite put your finger on it yet, you're originally from India.
Yes.
So why choose to start your restaurant in Bangkok as opposed to your home country or a culinary capital of the world like London or New York?
I think I'm a typical Indian. So in India, we have this thing called when you leave your country, you never go back. Oh. So I did that, and I thought the only country, as an Indian passport, you're very lucky that you can only get visa on arrival in Thailand or in, I mean, if I had visa on arrival in America or in London, I would have been there already. So, yeah, and I mean, and then the whole India would be there already. So, I mean, it was simple. It was just, my problem was that I was against time and tired of futuristic cooking, and whenever I used to put something futuristic on a plate or on a box or on somebody, the person would come and tell me, "You're an idiot." So I said, "I don't know," but then I thought that maybe, I always believe one of my best teachers taught me, he said, "You never convince me in your answers, you always confuse me." So I thought I would take the route of confusion, and today's world is about how confused you are, is how convinced you are. And that's why I tried to do it in Bangkok, because this was a place where there was no conviction in Indian food, like any other city. And the disaster on every Indian restaurant around the world is about a certain recipe and a certain bread. And I thought that let's take the challenge, and why only we would look at Western cuisine and take that as the notion of luxury of food. Because we have given most of the things that the Western people cook today with comes from Asia, comes from all this part of the world, and still we are so ignored. And I thought that how do I present that in a more beautiful way? And that's why Bangkok was the best place. I don't have to work. I was cooking in a country and there was no chili in the supermarket. I mean, imagine that. In Thailand, I mean, I can get my chilies, I can get whatever I want, and in the end, Thailand and India has a similar religion, similar history, similar culture, and chili and curry is the platform that sets it up. So I was in a comfort zone.
So if you had to do it all over again, you'd still choose Bangkok?
That's a tough question, because I've announced this last year that I'm moving to Japan officially, and yesterday I was in Japan, and
he flew back especially for all of you here.
Yeah, so I mean, yeah, who would miss this? So, yeah. So I mean, I would love to go back and start something new. And the thing is, if I do something here, it's too predictable, and I hate being in a comfort zone, because if you win awards and you consistently win them and you consistently do well in what you do, the only challenge you have in your life is to beat yourself. And I'm a madman, I'm a crazy guy, I'm suicidal in my work, because you're running the most successful restaurant in the country, and if you're running the most successful restaurant in the country, and then would it be suicidal to continue it or to discontinue it? And I'm discontinuing it. So I'm kind of stabbing myself. But I think most of the industries in today's world, from automobile to all that we are talking about the whole day, they need to reinvent in life. And I think if I keep doing what I'm doing, then I will never reinvent myself. Mm-hmm. So I've cooked myself from the 30s to 40s. And now it's time for me to cook in a different way from 40s to 50s. And that's what I think as a life is, as a chef.
So, being in Southeast Asia, what have you found the advantages or challenges of owning a business and running a business in this part of the world?
And I said, I moved in this country with $500 because that was the money you need to show to get the visa on arrival. So that was the money I had in my hand. And that was what I think is the image and reputation of the food here. I grew with this changing landscape. It's not about Bangkok, it's about Bangkok, Singapore, Malaysia. We were known for our street food, cheap eats, rice, noodles. This is what we were famous about. And suddenly, the gap, as I said, the gap is changing. The world is changing in a very big way. And I was part of this landscape change of fine dining, where suddenly Asian food was in. And then, I think what happens is, we as Asians, we don't trust our own self. We spent 18 years of our life eating our own cuisine, and suddenly, at the age of 19, you want to be a French chef, with no offense to French cuisine. But you want to be a French chef, but 18 years of your life, you'll be just eating Asian food, your home cuisine. And suddenly you want to be a French or an Italian or something which is Western. And that is the biggest change that has happened in the last 10 years. People are trying to do Peranakan cuisine. People are trying to do regional Balinese cuisine. People are going more into their own cuisine and rediscovering those things that were never thought to be edible. And that's the biggest change that's happened in the last 10 years.
Something that's also been happening, which I've noticed, I'm not sure if the audience has, is that a lot of these great chefs have chosen to start closing down their restaurants like you have decided to in 2020. So, why do that? I think that's the question on everybody's mind. I want to know as well. I haven't been able to get a table either, just FYI.
Like most people thought that it was a lie and a propaganda, and I was trying to use that as a PR to fill my restaurant, but I was trying to remind myself, and I keep reminding myself every day, that good things do come to end, and you would not stay on the top. And I personally am a very, I challenge myself, as I said, and I think that my cuisine will peak up next year, and I would quit on my peak. Because it's a very simple theory, especially in what I do and how I do. You climb the mountain, and you got to go to the top of the mountain, and you climb down to climb the next mountain. You can't go from one top of the mountain to the other peak. You can't do that. And that's what I think as a restaurant is. So I will peak up next year, but I don't want to be one of those restaurants whose name hangs and I'm old and pissed off at every customer who comes to my restaurant. And this is what...
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार,